About really hot topic, Facebook's IPO. First, I want to remind you of some of the basics of what an IPO is. Basically, this is the opportunity for normal investors to get their share of a company, become part owners. These companies have hundreds of millions, oftentimes billions of different shares out there in different investors' hands, and each share of stock is, your portion of the company that you own. It gives you the right to vote in most cases if you have, the standard stock that's being offered, and you help make decisions about what direction the company is heading in, and whether you approve or disapprove some of the things that the e-board is doing. So Facebook's IPO, obviously, they just recently filed their S1, which is their initial paperwork with the SEC to, attempt to sell out these shares. A few things of note in the S1 is, Facebook admits that the bulk of their business is straight advertising, even though a lot of people pay attention to the actual social network itself. The advertisements that they do, which is only on their web version, is not on smartphones or any type of mobile Facebook app. They That's where the bulk of their income comes from. Revenue over the last 2 years, I think, was plus 500%. Net income over the last 2 years was, I believe, like 430 something percent. So they're making a lot of money right now, and they feel like this is the opportune time for them to go ahead and sell shares. Um, Me personally, still a little skeptical about the IPO. Um, when you make a purchase in a company, you want either to receive dividends, which is going to be that quarterly or semi-annual payout per share that you own from the company, or you want the stock to grow so that you can sell it later for a higher price. Um, a lot of people are doom and gloom about Facebook, but I don't think there's really a realistic chance of you losing much money if you do buy stocks in it. But how much growth are you going to get? In their sector, it's not common for dividends to be paid out. So basically, the only hope for people is to, you know, be able to sell their shares later and make some sort of profit, which, is hit or miss. So I personally would like to see, something in their perspective in the next few months about what projects they're going to engage in, how they look to grow their business beyond just the advertising. But as of right now, that's basically all they're making money off of, but they're making a heck of a lot of money with it. um, but the things to look for or the things that I look for if I'm going to buy shares in a company are um, some of the revenue drivers, what currently makes them money, and what they're looking to expand upon to make more money in the future. Um, I look for dividends or not. If the stock is not going to offer dividends, then I'm looking for the stock itself to actually make some positive gains itself as far as the price goes. If there's no reason to believe that the price will increase and there's no dividends, there's really no point in having the stock. You're only going to lose money on commission when you buy and sell. Um, Also, it's just how creative and innovative is the company. When you have a company like, say, Apple, who stays, well, not ahead of the game, but they make a product that is so user friendly and so different from the rest of the market that there's not really much chance that they're going to go bankrupt. The revenues are not going to drop anytime soon. Just like Microsoft with their Windows applications. I mean, you got whole governments and businesses operating on Windows and things of this nature. So Microsoft is not going to, run out of customers anytime soon. So I look for a good customer base. I look for good customer relations. I look for good projects in the future, and I also look for sound financials. If a company struggles with some of the supply shocks like the flooding in Thailand last year, or the earthquake and tsunami in Japan last year, or something like that, and they're not able to recover, it shows that the company was not good at developing contingency plans, wasn't good at diversifying their operations, and it's not really a good look upon the leadership and what they're doing internally. So all this information is readily available on the internet. Any major news outlet, or if you follow people like Jim Cramer or Wall Street Journal or any of these outlets, they'll give you good insight into these companies and what they're doing, behind the scenes, beyond just their stock price, beyond just, the products that you see on the shelves, but what's going on inside closed doors. So do your research. As far as Facebook goes, I don't really have a recommendation as of right now. A lot of people are hot on it. I don't think you'll lose money on it, but we'll see. And I should have a couple more videos on it in the coming months as they look to actually engage in this IPO. So talk to you guys soon. Be good to say no.